Have you ever noticed how stores like TJ Maxx or Marshalls are just always buzzing, no matter what's going on with the economy? Well, their parent company, TJX, just dropped an earnings report that pretty much explains it all. So today, we are going to unpack the secrets behind their absolutely blockbuster quarter.
Right? It's a scene we've all seen. You walk into a TJ Maxx and it's packed with shoppers on the hunt. This happens when the economy's booming, and it happens when things are tight. So, what is their secret? How do they pull this off year after year? Let's dive into the numbers and find out.
All right, let's get right into the headline numbers from their third quarter. And believe me, they are seriously impressive.
First up, they saw a 5% jump in what's called consolidated comparable sales. Now, all that means is that if you only look at their existing stores, sales shot up by 5%. They didn't even have to open new locations to get this growth. And the best part? This number completely blew their own predictions out of the water.
And of course, that amazing sales growth trickled right down to their bottom line. Their diluted earnings per share, which is just a fancy way of measuring profitability, hit $1.28. That is a solid 12% increase from just last year. So you see, it's not just that they're selling more stuff, they're actually making more money on everything they sell.
And this wasn't just a small win in one specific area. We're talking about a victory across the board. From their total sales figures to their profit margins and their earnings per share, TJX didn't just meet their goals, they absolutely smashed them.
Okay, so we know the big picture looks fantastic, but where exactly did all this growth come from? Let's start breaking it down and see which parts of the business were really firing on all cylinders.
But before we get to the chart, let's quickly clarify that term I mentioned, comparable sales. You'll hear this a lot in retail. Just think of it as an apples-to-apples comparison. It ignores any brand new stores and only looks at locations that have been open for at least a year. This gives us a real sense of the health of the core business.
And as you can see right here, the growth was everywhere. TJX Canada was an absolute standout with an 8% surge. Back in the US, the Marmaxx division, that's your TJ Maxx and Marshalls, grew by a very strong 6%, and even HomeGoods posted a solid 5% jump. This is huge because it shows the success wasn't just some fluke in one division, the entire company was winning.
So what is the secret sauce here? How do they keep doing this? Well, it all comes down to their fundamental business model, what we call the off-price advantage. But hey, you don't have to take it from me. Let's look at what the CEO, Ernie Herrmann, actually said. He points to two specific things, their value proposition and that treasure hunt shopping experience. These two concepts right here, they're the twin pillars holding up the entire TJX empire. So what does off-price even mean? It's actually a pretty brilliant model. They go out and buy brand name and designer merchandise, and then they sell it for way, way less than you'd find at a department store. We're talking 20 to 60% off. But here's the real magic. The inventory is constantly changing. Every time you walk in, it's a completely new store. That's the treasure hunt. You never know what amazing deal you're going to find, and that's what keeps people coming back again and again.
And they run this playbook across an incredible portfolio of brands that people absolutely love. You've got TJ Maxx, Marshalls, and HomeGoods here in the States, Winners up in Canada, and TK Maxx all across Europe and Australia. It's a massive global machine, all built around this one incredibly powerful idea.
Now, having a great business strategy is one thing, but you've got to be able to turn that strategy into cold, hard cash and reward the people who invest in you. So let's see how TJX is doing on that front.
Get this, their pre-tax profit margin came in at 12.7%. For any retailer, that's a healthy number. But for a company that sells things at such a deep discount, it's frankly astounding. It's just a crystal clear signal of how incredibly efficient their business really is.
And they are definitely sharing the wealth. In the third quarter alone, just 3 months, TJX returned a jaw-dropping $1.1 billion directly to its shareholders.
And this chart breaks down how they did it. Nearly $600 million went into buying back their own stock, which can help boost the value of the remaining shares. And another $472 million was paid out in cash dividends, which is like a direct thank you to investors. This is a huge vote of confidence in their own financial strength.
So, after a quarter like that, what's next? Well, we're heading straight into the holiday season, which is crunch time for any retailer. And let's just say TJX is feeling pretty good about their chances. In fact, they're so confident that they're officially raising their financial forecast for the entire year. They aren't just telling Wall Street, hey, we're doing fine. They're saying, actually, we think we're going to do even better than we originally planned.
And here are the upgraded numbers to prove it. They now expect full-year comparable sales to climb 4%. They've bumped up their profit margin target, and they've raised their earnings per share guidance. This isn't just wishful thinking. This is confidence that is backed up by incredible performance and hard data.
So as we wrap this up, it leaves us with a really fascinating question. In a world totally dominated by online shopping, where everything is predictable and just a click away, TJX's success is this powerful counterargument. It's a reminder of the raw appeal of a physical store. So could it be that this treasure hunt model is actually the key to survival for brick-and-mortar retail? The answer to that could very well reshape the way we all shop for years to come. Thanks for tuning in.